Joe Hancock here, and I wanted to come to you on a really quick video on a loan estimate. What's a loan estimate? That is what you're going to get from most lenders when they show you the breakdown of the closing costs. So let's dive into it. And I went to a website that you can go to, which is a CFPB's website. If you type in CFPB loan estimate, you're going to find this page. It'll help explain it to you. But I'm going to walk you through it so you know what to look for when you get one of these, because some people still get confused on these, and it's completely understandable because there's a lot of numbers. And what do they mean? Let's dive into it. I'm going to turn my head because my screen's over here. So let's look at what we have here. So we have a loan estimate. It's going to have your name and your information here. Also, as we go down, you're going to see your loan amount, your interest rate, and your principal and interest payment. Okay, that's your principal and interest payment. Now, if you have an escrow, we're going to go down and you're going to see that start to build up down here. This is your escrow, $206 a month. So that's how much the escrow is. And you'll see a difference here in these payments. So you'll see the mortgage insurance is also added on there for $82 a month. This particular loan has mortgage insurance. But then you'll see after 7 years, it's dropping off and you'll see it's gone. So that's where you see a difference in the payments. Sometimes people think that, oh, I'm getting an adjustable rate mortgage. I'm not sure what this is. So that's the difference there. It's showing you your principal and interest payment and your mortgage insurance and your escrow. What's the escrow? That's your taxes and your insurance that are collected and paid for you every year, so you don't have to pay them on your own. If you want to pay them on your own, you need to at least bring in 20% down. So this is a situation where you're bringing in less than 20% down, hence why there's some mortgage insurance in there. And that's why you have mortgage insurance. If it wasn't for mortgage insurance, you'd have to bring in 20% or more down on every single loan. So actually mortgage insurance isn't necessarily a bad thing. It allows you to be able to come in with less money out of pocket. So let's dive down a little bit further. And so we see down here our estimated cash to close. So your closing costs are $8,000 and our cash to close is $16,000. That's your down payment and your closing costs. So why don't we dive into the next page here of it to break it down. Now this is where the rubber meets the road. So let's dive into this. This is where you can compare lender to lender. And I'm going to show you exactly where you look and exactly where you don't look, because sometimes lenders will maneuver some of these other fees I'll show you to try to make themselves look cheaper, and then at the end it changes a little bit. So let's go right here. Loan cost. That's where you compare the lender to the lender. Right here. Because that's where you're going to see the lender fees. You're going to see all of their fees right here. You'll also see just below here a section of additional fees that the lender may be collecting. Technically, they're not their fees, but they're fees associated with getting the loan through them. So this is the lender fees, and then the fees such as the appraisal, credit report fee, and stuff like that. So those you can also see how they are charged. So that is really quickly how you can look at this estimate and look at another estimate, look at the interest rates, and you can look at it and say, I can see this lender's charging me more than this lender for this particular interest rate. There you go. That's the number you're comparing. Let's dive into the other numbers so you can see. The next section of numbers are going to be title fees and survey and pest inspection and that kind of stuff. These are all things that are variable. And if a lender wanted to, they could lowball these fees a little bit to you to make themselves look a little less expensive than their competitor. But their fees up here may be higher, and the other competitor may have no fees. Let's say they're not charging you anything, but they're showing the reality of here. The other lender may decide they want to lowball these fees to be able to appear less. So always compare Section A. That's what you're looking at on what, to be able to compare what each lender is charging you. So we're going to go up here, and now you're going to see, and if you'll see also before we go up, A plus B plus C totals here. That's all of these fees totaling together. These are closing costs. Let's go over here to other costs. These are costs that are going to be called your prepaids and your taxes and other governmental fees. These are pretty much standard. They're going to be pretty much the same across the board because they're just going to be standard fees. On the prepaids, these are where they are setting up your escrow account, your taxes and your insurance. That's all being collected, and they're setting up enough in the account to be able to pay it by the next time it's due. So they're going to collect 12 months of if you're a purchase, for example, 12 months of your insurance to pay it at closing, plus another 2 to 3 months in reserve. The reason they have the reserve there is just in case next year your insurance goes up and they have a buffer to take care of it. Depending on the time of year you close will be how many months they collect for your taxes. For here in Florida, right here in Alachua, every November the taxes are paid. So therefore they're going to collect a certain amount depending on when the taxes are due. So therefore they have enough to be able to pay the taxes when they are due. The seller will credit you up to the point you buy the house, and then they'll collect the remainder to be able to make sure they have enough by the time it's due, plus a little reserve of 2 months to be able to have a cost overrun just in case. So that's what prepaids are. And so you'll see the initial escrow set up here, and you'll also see the insurance and how everything's kind of being set up. The other section here is an optional title policy for an owner's title policy. And a lot of times right here in Alachua is the seller will give you a title policy. Different areas are different. So that's how this area works here in Alachua. So the total closing costs are going to add all these fees together, and that's where you get the $8,054. And then when you scroll down here, you're going to see your total closing cost, the down payment, the deposit, that's how much the escrow deposit was put up, and then it figures all that in, and that's where you come up with your cash to close. So that is how you look at a loan estimate. And that's the page 2 is where you're really diving in on it. Page 3 is not going to get into as much of the details. It's going to talk to you a little bit about how much you're paying out, what's your APR. And what APR is, just so you'll know, APR, I'll go back here, APR is figuring in the cost to get the loan. So APR is a quick way for you to figure out how much in fee you're paying on the loan. So let's go back here. We have a 3.875 interest rate, right? We're going to go to page 2. They're charging you 0.25% in points. You have an application fee plus an underwriting fee. So those are all costs right there, $1,800 in costs. So when you figure in the cost to get the loan, that is where the APR is getting there. So we're 4.274 on APR. It's also going to calculate in mortgage insurance as well into that and a couple other things. But the main part here you're looking at is that. When you look at the APR, if you see a 3.8 and a 4.2 APR, that's going to tell you there's some fees involved, lender fees involved. It's a quick way for you to quickly see if there's fees involved in that loan and how much they are. If 3.875 in interest rate and the APR is 3.9, there's not as many fees as the 4.2. You can follow how I'm going on that. So that's how this all works, and it's a pretty simple process to figure out, and I just wanted to run through all this for you. If you have questions, reach out and be happy to answer any more questions you have. But this is a form that you're going to get from every lender, and it's a great way for you to compare what each lender is offering you and have an understanding of what's going on.